Hey traders and investors, it's Serge Berger here. As I am recording this video here Friday afternoon, the markets continue to get very much pressured here by a sliding price of oil, concerns that we've had basically now for some time, and the slide as far as the S&P 500 concerns as of right now continues down about 8% or so on the year to date, down about another 2.5% or so for the second week of 2016. There are a lot of things going on, and I think it's extremely important that we are aware of a few crucial things. So let me walk you through how to risk manage this market. First of all, I do want to send out a little bit of a cautionary note, because what I'm seeing in some of the Twitter streams and some of the email spam I'm getting is a little concerning. There are a lot of financial pundits out there that are trying to tell you how to trade or invest in a bear market. The reality is that most of those people, at least the ones I've seen that are trying to tell you this, have actually only been in the market for 5, 6, maybe 7 years at best. In other words, they've actually never seen a bear market. Okay, so just please be a little bit careful about that out there. A lot of guys are trying to sell you something, and a bear market's very, very difficult. So that's why I'm trying to make sure that we are more in capital preservation mode more than anything for the time being. And I think that's really the big point I want to just get clear right off the bat. We're looking at an S&P 500 monthly chart right here. What I want to show you guys is that we are on the verge of a monthly crossover of these simple moving averages. That red line is the 5-month moving average. The blue one is a 25-month moving average. What we are seeing here is a potential crossover of the 5-month moving average below the 25-month moving average. The last time that took place on the bull side was in 2009, and markets went off to a major stampede higher. Last time it happened on the bear side was in 2008, and markets collapsed. I don't think markets are going to collapse right here, right now. In fact, I do think they're going to sharply rally counter trend. But I did want to point out this out to you, because there is a potential that this could sooner rather than later, based on this, could sooner rather than later lead to a real washout that not very many people are actually prepared for. So in my 2016 market outlook, which is going to be available as of next week, I do think the S&P has potential to get down to that 1600 level, which is not very far-fetched at some point this year. Okay, that's also basically a retest of those 2013 breakout levels, i.e. where they broke past the 2007 peak, and quite frankly, that's where we got the confirmation that this market is probably in a new secular meaning 10 to 15 plus years bull market. Okay, so that's really important to keep in mind. Now, let's look at a couple other things away just from equities, just to give you a bit of an idea of where we might be, and that I do think we are probably due for a pretty sharp counter trend bounce here in risk assets. Looking at high yield, the HYG ETF. This thing is literally an absolute free fall, but we are getting to levels that are getting more and more interesting for a counter trend bounce. Okay, it's important to understand that this is going to be counter trend, at least for the time being. A counter trend bounce in high yield makes a lot of sense to start taking place here at some point in the not too distant future. Energy, which continues to be pounded, and like I said last year, and I've been telling subscribers this all literally for months now, as long as oil doesn't bounce, it's going to be risk off. And energy is trying to bounce, it's really trying its best, but it's not succeeding. And as long as that doesn't take place, it's going to be very difficult for equities to rally. So again, capital preservation versus reward chasing is how we make money always, but particularly is how we save money in bear markets. And by most analysis that I've done, the chances of a real bear market, i.e. the S&P 500 correcting between 20 and 30% at some point this year, look extremely likely. Look at the Dow Jones Industrial Average, for example. The Dow Jones Industrial average here, you can see, has a very important, also big picture moving average that I am looking at. It's the 32-month moving average, and the 32-month moving average has had a tendency of being very telling when a break below it starts getting the downside accelerated. And you can see we're now on the verge of breaking below it. In fact, we've broken below it, but of course this is a monthly moving average, so we need to see where this ends on a month-end basis, i.e. at the end of January. But this is a really crucial thing to look at, and I think a lot of people are not aware of these big picture things. All that they're trying to do is look at the things near term, and that's not really going to help you so much in a bear market. So we need to make sure we have that perspective always, but particularly in bear markets. So just quickly back for the near term, I do think we are very much on the cusp of a sharp counter trend rally here. Maybe it's just going to be a couple of weeks long, but I do think we are very near it. Again, we haven't yet had any bullish confirmation yet. We have not yet had a bullish reversal like the ones I always talk about, but we are probably getting very, very close. So again, there's no reason to jump the gun too much. One can nibble a little bit here at these levels. I don't think that's an issue, but ultimately I do think a risk asset bounce here, S&P back towards 1990 to 2000 is not far-fetched. Again, we need confirmation, just like we did last year. There's no last week. There's no reason to jump the gun here. It's all about waiting for confirmation and remaining patient. So that's what I'm seeing here. I do hope this makes sense. And we are, so you know, reopening the Clubhouse membership where you get all the trade alerts, analysis, morning videos, all the kind of stuff sent to you directly every single day with a login and special member webinars and also things like that. We're opening up Clubhouse membership again to new members next week, so stay tuned for that. Please like the video, subscribe to my channel, and as always, guys, I'll see you in the next video.